Hi, welcome to CGAP's webinar on cybersecurity for mobile financial services, FAQs for regulators, supervisory authorities, and digital financial service providers. First, just a couple of housekeeping matters. This is an audio broadcast, which means that all attendees' microphones will remain muted during the entire webinar session. To ask questions during the webinar, please use the chat box on the right-hand side of the WebEx session. Please submit your questions at any time during the webinar presentation. To ensure that your question is seen by the moderator, please select all participants from the drop-down menu when sending your question. This webinar will be recorded and emailed to all attendees and registrants. So today we're talking about a very timely topic of security for payment systems. Particularly 80% of the developing world's population owns a mobile phone. As mobile phones have become common in low and middle income countries, they've become effective delivery channels for financial services to poor people, especially those living in rural and remote areas that lack financial services infrastructure. However, mobile financial services can sometimes put consumers at risk of fraud if proper cybersecurity measures are not in place. The risk is heightened in developing countries where consumers, rather than providers, generally bear the cost of fraud. Mobile financial services can meaningfully advance financial inclusion, but to do so, they must be reliable and trustworthy. Today's presentation answers some of the most frequently asked questions regarding mobile financial services that are posed to regulators, supervisors, mobile network operators, and digital financial services providers about what vulnerabilities exist in mobile financial services and what countermeasures can be taken to address data security. We're pleased today to have a presenter, Paul Makin, who's an independent financial inclusion and digital identity consultant who's active in the field since 2004 when he co-created the M-Pesa service. He's had extensive work on advising providers in Nigeria, Somalia, South Africa, and elsewhere on the operation of mobile financial services, supervision, and steps that can be taken to better protect these services. With that, I will turn it over to Paul, who will go through the FAQs. Thank you, Paul.
Thank you, David, for that kind introduction. Hello, everybody. This is intended to be based on experience I've gained over the last 14 years, looking at the development of digital and mobile financial services across emerging economies, sub-Saharan Africa and South Asia, and also based on experience I gained in a previous life working with financial service providers across Europe and North America. So the areas that we're going to be discussing are, first of all, let's look at what fraud in mobile financial services look like, and then given that we are exclusively looking at the delivery of financial services over mobile phones and mobile networks, are they actually secure enough? Can DFS providers secure their systems? And what can regulators and supervisors do in support of the security of those services? So moving on straight away from that, sorry, a bit of fiddling around with mice here. So here's an example of a fraud that I actually saw happening in live. So I was working with this guy called Jonathan, and he was a user of a mobile financial service. And he happened to glance at his mobile phone, and he saw this had gone offline. It just said no service on the screen. But this didn't actually worry him because, of course, in the area where we were working, this kind of thing happened occasionally. There was insufficient capacity on the network, and it would occasionally just go offline. But he was sure he was fine, because a few minutes later his phone reconnected to the network. It came up with the usual screen, and all was well. But later that day, he decided to use his mobile money account in the coffee shop we were in to buy a cup of coffee, but the payment failed. And when he checked his balance, he found that the entire amount he thought was in his mobile money account, which he thought was probably more than about $100, was gone. And since then, quite a few similar cases have come to my attention. So we know this is happening fairly regularly. So I just wanted to, first of all, before we go into talk about how these things are happening, I want to talk about, what a mobile network looks like from a mobile financial service perspective. So what we have here is, first of all, a mobile phone on the left. It could be a smartphone, it could be a feature phone, but within that there is obviously a phone operating system. There may be a DFS application, and there's certainly a SIM. And then there's the mobile network operator systems with which the phone communicates via radio. And the MNO systems consist generally of a base station, or there'll be lots of base stations around the country. And these all connect to a central network operation system. And then in support of that, the various IT services. And then on the right, we have the DFS systems themselves. So we can look at the DFS Providers systems, which communicate with the network operator systems. And they talk to a bank, usually, if they're not a bank themselves, or other external service providers. So in this case, in Jonathan's case, what had happened was that somebody had attacked the MNO systems to deplete his account. But there's lots of other vulnerabilities across this ecosystem, as the financial information flows across the multiple systems that may not be adequately secured. So by looking at frequently asked questions around the cybersecurity of these services, we'll look at key vulnerabilities along the financial transactions journey through these systems, starting with the mobile network. So on the mobile network side, as the data passes through these systems, it's already vulnerable to several types of attacks before it even reaches the DFS operator's accounts. So the first is eavesdropping by external hackers. Hackers can intercept the communication between a mobile phone and a cell tower. Eavesdropping via fake network base stations. So a fake mobile network can appear, which is disguised as a legitimate one, and which allows criminals to intercept the communications to cell towers. There's exploitation of roaming. So a mobile network's roaming surface can be misused to launch attacks from anywhere in the world, from the comfort of a coffee shop, wherever you may be. Insider eavesdropping. So mobile operator staff and contractors can listen to the communications between the cell towers and the MNO systems. And there's also other insider threats. So sophisticated criminals inside the MNO, or indeed the DFS operator, can eavesdrop on communications between the internal systems. So we look at the first of those. Eavesdropping by external hackers. This is this circle here, the red circle. And in this case, a criminal can intercept the communications. They can look at calls, they can listen to calls, they can look at text messages, they can view USD sessions, and they can look at mobile data. So they can see PINs and passwords. And then, so therefore they can capture your account details, they can capture your PIN, and they can use your credentials then in SIM swaps or other attacks to initiate a fraudulent financial transaction. I have to emphasize that this is actually a localized attack, which is limited to customers connected to a particular cell tower. So maybe not such a big concern. And what's more, it allows hackers to view, but not actually alter a transaction. Moving on to the next one. Sorry if we feel we're going a little quickly, there's not a great deal of time. The fake base station. It is almost trivial now for somebody with a technical bent to create a fake base station. And if that fake base station signal is stronger than the real base station, usually because it's closer, it can capture the customer's DFS session. When this happens, so a criminal can view and change transaction recipients and amounts. They can steal PINs and passwords, and they can use them later in SIM swaps or other attacks. This is, again, another localized attack. You have to be relatively close to the people you're attacking. So a great place to do this is a mobile money conference, where you can set up a fake base station and capture everyone's transactions. And before you laugh, this has been done many times. Then the roaming capability. This is one of my favorite attacks, actually, because it is so cunning. It's using the mobile networks against themselves. So when customers use a roaming service, you connect to your home network via another mobile operator's network. And exploiting the links between mobile operators that facilitate roaming, an external attacker can impersonate a mobile operator or a DFS operator by sending and intercepting text messages. They can push USSD sessions to customers' phones, or they can listen to voice calls. They can capture, for example, an OTP, a one-time PIN, delivered via text message. And these tactics can be used to get a customer to change their PIN or to capture the one-time PIN, which allows a DFS account to be hijacked. Next one, insider eavesdropping. So M&O staff and contractors are able to conduct centralized attacks that simultaneously affect all DFS customers using a mobile network. So this is no longer localized again. They can intercept calls, text messages, USSD sessions, and mobile data sessions, and then use stolen PINs and passwords to initiate financial transactions from customers' accounts. Because M&O insiders can see activities of all their customers, rather than just individuals or those connected to a particular cell tower, they can identify and target an M&O's wealthiest customers for attacks. So again, this is scaling attacks up. And then other insider threats. So an insider at a mobile operator or a DFS provider can intercept the communications within the M&O systems and between the M&Os and the DFS provider systems. Again, this is text messages, USSD sessions, mobile data sessions. So you can get PINs and passwords, use them in SIM swaps or other attacks to request transactions from customers' accounts. These centralized attacks can simultaneously target all of the DFS provider's customers who are using a particular mobile network. So as you can see, there's a wide variety of points that you can use to attack a DFS system. So we can see that criminals can attack mobile networks in many ways, potentially reducing the reliability of mobile financial services. However, I'd like to emphasize that this doesn't mean that DFS providers should stop using mobile networks to reach their customers. Instead, they should implement strong security measures, which is the point of this presentation. They should never rely on someone else, such as the mobile operator, to do this for them. Never rely on someone else to do your security. Later sections of this presentation set out minimum protections to improve the security of financial transactions. So the key question then is, are mobile phones themselves secure enough for financial services? So mobile phones enable customers to access DFS. They are an important element in ensuring the security and confidentiality of customers' accounts. So it's vital that hackers cannot access phones to see what's stored on them, and that DFS data and transactions, specifically including PINs, can't be eavesdropped. Properly securing a mobile phone requires action not just from the DFS provider, but also from mobile phone manufacturers and customers themselves, who should be made aware of their responsibilities. So also, we shouldn't forget the feature phone. They're the most affordable mobile phone option, and they remain dominant in low-income countries and among poor populations, though we are aware that this is reducing. For example, I was in Nigeria last week and I was told that smartphone penetration is reaching 80% in many previously poor areas. But feature phones are of interest because they don't contain a lot of sensitive information and they can't be manipulated remotely very easily. So there's not much of an incentive to hack them because there's nothing to scrape off them. On the other hand, feature phones lack encryption, so they can't protect against the lack of security in the mobile network. One way of getting around this, of course, is to use a properly designed SIM Toolkit app, which can help address the security gap. An alternative in a USSD environment is enhanced transaction monitoring by the DFS provider. Smartphones, on the other hand, are becoming more prevalent. They are sophisticated computers which are connected to mobile networks that are built from the ground up with security in mind, but flaws still do occur, and we have to be on our guard. And in fact, some of these strengths can also be a weakness. So smartphone manufacturers should be monitoring for new flaws, and they should be making fixes available. And we know that some are better than others in this regard, and many don't provide security updates once the phone is more than 2 years old. And smartphone owners have a responsibility as well to update their phone software as soon as a new version is available. Some smartphone owners remove the security controls, rooting or jailbreaking it's called, because they don't like the constraints that these controls impose. And sometimes they don't actually understand the security implications of that, or they feel that they can manage it themselves. And in general, a DFS provider should never allow a device with compromised security to access those services. I should emphasize that this is necessarily a brief introduction, and we do not have a great deal of time available. So DFS customers should be making sure that other people can't use their phones by using a PIN or a biometric to control access. And they should be installing updates as soon as they become available. DFS providers should, if possible, provide a suitably secured app, and certainly not offer services through a device's browser, if that's at all possible. They should control access to the app by using a PIN or a biometric. This also should apply to feature phones. Update the app to address any security shortcomings as soon as they're discovered, and push updates out to customers. And when payments are embedded within another app through an API, the embedded payment app must continue to manage its own security. And this is becoming an increasingly frequent occurrence. So, in summary, app-based transactions have fewer vulnerabilities. We know that USSD has major security vulnerabilities. And there's no security from the customer's handset right through to the mobile operator's back office systems, allowing a suitably inclined hacker to eavesdrop account details and PINs. A hacker can push a USSD session to the customer in a way that looks like the DFS provider has contacted them. They can ask the customer to change their PIN, which can then be captured. It's never more secure than using an app. SMS isn't a lot better. Like USSD, it's unencrypted. Using SMS for two-factor authentication isn't good practice because an SMS can be snatched out of the air by a hacker misusing a roaming service. Old SMS messages are stored on the handset for people to read. The only exception I'd make here is the use of SIM toolkit apps that do their own encryption of SMS. Smartphone apps are the best option. They support well understood techniques to enhance app security. But, of course, most are lower income and underbanked. Don't use apps, don't use smartphones. Underlying many frauds is SIM swap fraud, the most common risk for USSD and SMS-based DFS. It doesn't apply to app-based services, which aren't reliant on the SIM. SIM swaps are particularly problematic if the DFS provider isn't a mobile operator, as it's not uncommon that these providers have a limited understanding of mobile network technology. I've certainly seen a case where a SIM swap attack is going on and a bank-led DFS provider cannot actually understand what's happening because they don't actually understand how mobile networks work. SIM swaps often follow eavesdropping attacks, so you grab the credentials and then do the SIM swap to take advantage of that. So how can DFS providers secure their systems and transactions? Well, you've got to focus on insider threats first. And the reason for that, of course, is that although the media makes a great deal of hacking attacks and fraud perpetrated by and against agents, the most successful attacks in terms of the total money defrauded are always insider jobs by DFS provider staff. So DFS providers' cybersecurity efforts should focus on these insider efforts first. Otherwise, you risk financial loss, loss of customer confidence, and potentially bankruptcy. I think everybody who's active in this space can mention one or two insider jobs that have gone on that have come close to destroying the mobile operator affected. Mobile money operator, sorry. So how do you mitigate these insider threats? Well, first of all, know your stuff. Cybersecurity of any sort can be undermined by malicious stuff. So DFS providers should be conducting appropriate background checks when recruiting staff. And checks should include police and criminal records and credit reference checks to identify excessive debt. In other words, people who are vulnerable to blackmail or bribery. They should apply to all senior staff and any staff who are involved in accessing or configuring the DFS platform, any form of financial activities, moving money around between accounts and in and out of bank accounts, etc., and anyone in a customer-facing role. And then it's not just about knowing your staff, it's about knowing precisely which staff did what. So this is all about staff authentication. So an internal control is only effected if you can tie an individual staff member to an action on the DFS platform. So you need two-factor authentication. Require staff to log in, for example, using your username and password and an additional factor, such as a scannable QR code. Don't use SMS-based methods because, as we've already said, they can be captured. And staff in sensitive positions should probably be using something more effective like a key fob that generates temporary passcodes. Everything needs to be auditable, so we need to record all login attempts, whether they're successful or not. So at least if somebody does get away with the money, we can trace them later. And then, of course, we need role-based access and auditability. So money transfer functions in particular should be carefully controlled through role-based access. So someone whose job doesn't involve money transfers can't transfer money. Maker checker controls, also known as 4 eyes in some markets. So a junior staff member can make but not check or approve transfers, and a manager can't make but he can check or approve transfers. These controls are reinforced by recording logins, by making investigation and auditing tools available to senior management, and also actually encouraging senior management to use those tools, which can in itself be a challenge. And then, of course, there's the whole issue of processes and control points, which in many businesses are undervalued. So carefully defined and implemented business processes not only improve a business's operations, they also mitigate staff error, they reduce over-reliance on key staff, and they reduce risk related to the lack of knowledge sharing. So processes are best developed and operated using a business process management service, and they should include a set of control points such as transaction values beyond which additional authorization is required, a particular person that is required to carry out a function, the time of day when a function may only be performed. A classic one is funds transfers out of hours, which should obviously not be allowed. And many a fraud has been caught through that one. And then, of course, there's the need to regularly reconcile accounts, which is, again, an undervalued function. So making sure the recorded transactions, the values in customers' accounts, and the overall value in the bank accounts are all in agreement. This is crucial to maintaining the financial integrity of a DFS service. Many well-known insider jobs could have been detected earlier through rigorous reconciliation and reporting. So there's two main functions. Ensure that all customer balances are secured by real funds in a bank account, and to indicate a potential fraud perpetrated by breaching cybersecurity controls and controls for creation of value. Reconciliation can often be viewed as the canary in the mine. It's the first sign that something is wrong. Sorry, excuse me. Then secondly, adopt measures to protect against the third-party threats, so moving out from the internal threats slightly. So the first is know your suppliers. It's important that you know that you verify the integrity of your suppliers and that you understand the risks that arise from the supplier's internal activities or the relationships with third parties, which might, for example, make them subject to coercion to provide improper access to DFS providers' information. And what I'm thinking about here is things like a provider who is in debt to a third party who might be interested in getting access to your systems. So there's obviously coercion and bribery, which could take place. And what's more, this vetting process shouldn't be a one-off. It should be a regular part of annual due diligence. It also requires a common understanding of the division of responsibilities and liabilities in case of fraud. And then, of course, there's encryption, which I bet you're surprised is coming quite late in this. So cryptography is crucial for the operation of DFS and for data protection and privacy. It helps ensure the confidentiality and integrity of communications amongst a DFS provider and its customers, suppliers, and other external parties, a DFS provider's staff, and inter-process systems. I emphasize that again, the inter-process systems within the DFS operation. So all data must be encrypted both in transit and at rest, and all transactions and staff activities must be logged for future auditing or investigations. And in addition to the detection and prevention of fraud, an important element is the active automated transaction monitoring, which can contribute to a DFS provider's anti-money laundering and combating the financing of terrorism compliance obligations. But that's not really the main point within the DFS operation itself. So you need a fraud officer, and then that fraud officer needs fairly sophisticated tools to allow them to follow the money around to see where it has gone, and which is often the first indicator of who is responsible for a fraud, all of which is vital information for passing to law enforcement. Oops, sorry, went too fast. And then physical security. This is often underestimated. So it's the first step in ensuring cybersecurity, and it limits the opportunity for the subversion of cyber controls. So well-managed data centers focus equally on physical and cybersecurity. And at a minimum, physical security involves, for example, only one strictly controlled entrance to a DFS provider's premises. All the other entrances are secured, and fire exits have alarms. All rooms are secured with biometric locks, which require touch in and touch out to avoid tailgating, and access is restricted based on job function. Staff in customer-facing roles or in the finance department are not allowed to have their mobile phones with them on the premises. Phones should be stored in metal lockers during working hours. Video surveillance and 24-hour recording of all areas, but cameras must face away from screens that might show sensitive information for obvious reasons. And with regard to the biometric locks, which I mentioned, there has to be a central system which monitors the current presumed location of all staff, which room they're in, so that if they turn out to be in the wrong room because of tailgating, for example, it's a disciplinary offence. Physical security measures also apply to visitors, so you need to check and log visitors' identities. Do not permit visitors to bring any electronic equipment into operational areas. In non-operational areas, mobile phones and laptops might be allowed, but the serial numbers of laptops should be logged, and that's fairly common. But providers should check to ensure visitors leave with the same equipment they brought. Switching laptops is the fastest method of stealing data, and only once in any data anywhere has anyone actually checked that I left with the same laptop I arrived with. Ensure visitors are accompanied by a staff member who's responsible for their conduct, and continually remain aware of visitors' activity. Disappearing off to the loo, for example, is a common trick to try and get away from your your guardian. Sorry, lost my mouse. Cybersecurity reviews. Every DFS service should undergo an external cybersecurity review before launch and at regular, probably annual, interviews after launch. Findings, including the vulnerabilities identified and the recommended countermeasures, should then be presented to the DFS Providers senior management team. Supervisors should require DFS providers to undergo these external cybersecurity reviews, to report the final results and their action plans to supervisors, and to implement effective and efficient countermeasures in a timely manner. So, what can regulators and supervisors do? First, in the light of all this, do we feel that regulators should allow DFS to happen at all? Yes, obviously. It's a big business. It's a vitally important business to the people that they serve. But regulators should require certain security measures. So the aspiration should be a service that provides its own end-to-end industrial-grade security using a properly secured smartphone app. Having said that, encrypted SMS using a SIM toolkit app hosted on the SIM works for both feature phones and smartphones in most lower income countries. But we recognise that this isn't possible because of low smartphone penetration, and the DFS provider might not be able to place an app on customer SIMs. This is well understood. So therefore, any DFS provider must implement it and use sophisticated monitoring processes and facilities in order to counter fraud. Due to the additional risk incurred by using USSD, when assessing a service that relies on this technology, supervisors should place particular emphasis on the quality, availability, and continuous use of such essential monitoring facilities by DFS providers. Excuse me a second. I can't emphasize enough that financial sector regulators should not attempt to set technical standards for DFS cybersecurity management. This is a particularly archaic and complex discipline, and very few financial sector regulators are qualified to do this. Only cybersecurity experts should set the technical standards on security. That's not to say that standards shouldn't be set. They should be, but they must also be dynamic to reflect the continual evolution of best practices, the emergence of new threats, recent technologies and protocols, and new approaches to mitigation. So instead of technical standards, regulators should specify an expert body that issues security standards, such as a national or regional cybersecurity authority, or indeed NIST's Information Technology Laboratory is often referred to in this context. There should be requirements to conform to the nominated body's security standards. There needs to be an inspection or audit regime to make sure that these standards are being followed. And there needs to be a mechanism for responding to new threats. There needs to be consideration as well of the liability of DFS providers. So regulators should consider the liability issues that might arise if security standards aren't followed, especially if non-compliance results in financial loss. So issues to consider include mandatory communication to the authority and to the affected customers, requirements to refund the losses from customers' accounts, which can be particularly difficult in remote rural areas, and the potential liabilities for customers' consequent losses. Regulators may allow lower technical security standards, including, for example, USSD, by balancing the higher risk with stricter liability. And regulators can require a customer complaint about fraudulent activity in their account to result in an immediate refund, perhaps into an escrow account, with ascribed payments being either returned or forwarded to the customer after investigation. There needs to be consideration of the responsibilities of supervisors. A lot of sensitive data is being provided by DFS providers to the supervisory authorities, including data about their customers, and the authorities have a data security responsibility in respect of that. So they should consider that they should be subject to many of the same internal cybersecurity measures as are required of DFS providers. So to summarize, we're going to actually make some recommendations for the various parties involved. So first of all, the regulatory authorities. Regulators need to identify a centre of cybersecurity excellence, national, regional or international, and we know that regulators are particularly interested in a number of regions in establishing such centres. They should work with this centre to define the technical cybersecurity standards for the delivery of mobile or digital financial services. They need to obtain a commitment from that centre that those standards will be maintained and updated as new cybersecurity threats emerge and technology advances. At that point, the regulators are in a position to define policy that references these standards. So separate from the regulatory authorities, the supervisory authorities have to engage the DFS providers in their area, their country, in a program of continuous improvement. They need to adopt a comprehensive data security supervisory program, including monitoring DFS providers' compliance with the cybersecurity regulations, requiring annual cybersecurity review reports from DFS providers. They must visit DFS providers' operational centres to verify that the process and control points that have been documented are being followed. They should also review and compare the suspicious transaction reports that they receive from DFS providers. In particular, it should be a red flag if they're not getting any STRs from DFS providers, or if they're getting too few compared to, say, the banks in their region. And then for DFS providers themselves, they need to assess their risk exposure and improve countermeasures where necessary. They need to annually engage a qualified third party to carry out a risk assessment and cybersecurity review, and they need to submit the report to supervisory authorities and engage with those authorities regularly as part of a program of continuous improvement. They should focus equally on technological controls and process controls. And when assessing customer liabilities, give reasonable consideration to any identified security weaknesses and the consequent issues around fairness to their customers. And with that, I'd like to thank you all for your attention and pass back to David and the team.
Thank you very much, Paul. This is David Medine. I'm the Senior Advisor and Lead on Data Protection and Cybersecurity Issues at CGAP. I just wanted to let people know that we will be making Paul's deck available after today's presentation. And thank you, Paul, for scaring us to death about using our mobile phones, but then bringing us back to life and recognizing that there are important steps that can be taken by supervisors and providers to better ensure the safety of transactions. So we've had a number of very good questions that have come in. Let's see if we can get to them during the remainder of the webinar. A couple questions have come in relating to real-life examples for how some of the vulnerabilities on mobile payments have been exploited. And in your experience, which vulnerabilities are most frequently exploited by fraudsters, including whether SS7 attacks are prevalent?
The most common attacks that you see out there are a combination of eavesdropping, which may be technological. The we have seen USSD monitoring, for example, to capture account details and PINs, but there's an awful lot of shoulder surfing that goes on through agents as well to try and catch PINs, for example. That is far from uncommon. But the USSD and SMS monitoring is increasingly frequent. I've seen that in certainly Uganda, Kenya, and Tanzania, and Bangladesh. So that's happening there, and they are usually the precursor to a SIM swap account, a SIM swap attack. So that attack that I described at the beginning, where somebody else saw their phone go dead and then come to life, that happens increasingly, and it was becoming almost epidemic level across Kenya earlier this year. The SS7 attack is not, which is the roaming attack, is not as common, but it is becoming increasingly so. Frighteningly, and it's remarkably easy to do. The biggest attacks by far are, of course, the insider jobs. We all know of these attacks. Anyone active in the industry knows that there are 2, maybe 3 DFS operators who came close to collapse following insider attacks by management, removing the money or creating fake money and cashing out on large scale. So yes, they are real, sadly.
Thanks. One question that's come up, we've looked at the credit card system and shown that they've done tremendous steps in reducing fraud. And the question is whether, what would it take to ensure that mobile money users were similarly protected from cyber fraud? And again, with regard to that, is the allocation of liability a factor, do you think, in driving security of these payment systems?
Yeah, the credit card world, the Visa, MasterCard, American Express, have invested billions in ensuring security, and they do proper end-to-end security. So your chip card actually carries out, as I say, it's end-to-end security between your chip card and the back office systems of the issuing bank. It's an extremely secure system, to the extent that the card that you have and the terminal that you interact with actually have to decide whether to trust each other in order to conduct the transaction. And only if they do decide they like the look of each other does the transaction go on. And that's even before you enter your PIN or whatever other thing you might do with the card. And then it's end-to-end encryption of all transactions right the way back to the bank systems. And it's that kind of standard that we need the DFS industry to head towards. And that's what I'm trying to encourage people to do. The liability issue, well, I think there's an awful lot of, frankly, getting away with murder that goes on. People blame others. They blame agents. They blame criminals, and they clearly don't feel that they should be liable for any of this. It's almost a caveat emptor, let the buyer beware in many cases, which is not good for the reputation of the industry.
So another question is how hard is it to do all this? Do I need sophisticated, complicated equipment, a lot of training, or can I sit in an internet cafe with my laptop and steal transactions?
I don't particularly want to tell people how to do these things, but it really isn't difficult. The roaming attack you can do with any internet-connected laptop and a bit of know-how. In order to act as a fake base station, you can connect a GSM modem to your laptop and download a bit of software, which is unfortunately freely available, and away you go, frankly. And there is software to both be a fake base station and to decrypt the communications of everyone connected to a base station that you yourself are close to. If you can eavesdrop it, you can break it. The protocols that are in place are indeed secured, but the security is not good enough. Bear in mind that the security of mobile phone networks was designed to protect the privacy of conversations. It was never intended to protect financial transactions. And one mobile operator I spoke to said that they do not guarantee the security of their mobile network for financial transactions. It was never designed for that. And I'd agree wholeheartedly.
There have been reports that 5G phones will be much more protected from these kinds of attacks, but as we know, it's going to be a long, long time before people in the developing world have 5G phones. So it's something we're going to have to deal with USSD phones. And along that line, one question is whether SIM toolkits are more secure than USSD transmissions, and should there also be a concern for those that have smartphones with apps that require excessive permissions to access information on the phone?
Absolutely. Be very suspicious of those apps that demand access to everything. It's remarkable how freely people give away their information. It should be only the legitimate DFS app that is used on your smartphone, and it should be acquired from a legitimate place, and you must have a high degree of confidence that it is the real app and not a fake one. And don't download one that claims to do the same thing but better than your official app, because who knows what data you're handing over to it. With regard to SIM Toolkit, it depends on how it is implemented. SIM Toolkit in itself is not inherently more secure than using USSD. It's if the app does the end-to-end security that I'm talking about. So there are mobile money services out there that use the SIM Toolkit and do a very similar job to that done by the credit card companies. So there's an end-to-end encrypted session from your SIM back to a security module back in the mobile operator's offices. It's all down to how it's implemented.
So very simply, why are providers not doing all the things that you're suggesting? Why are there still gaps? And then a related question is, what can donors do to support cybersecurity practices in emerging markets, both at the supervisor level and provider level?
The first of those, there are mobile money operators that do a good job of it, but the majority don't. And the reason for that is there really isn't a penalty at the moment. The practices within the industry with regard to this are by no means as good as they should be. And the level of attacks against individual customers have not yet reached that same crisis point. And it's shameful to me as a member of this industry that we have to wait for lots of customers to be defrauded before we take this seriously. And with regard to the other point, how do we establish these cybersecurity centres? David, I think you're probably better placed to answer that, as I know that you're very active in that. Perhaps you'd like to say a few words about that.
Sure, just briefly, one of CGAP's initiatives this year is to explore the feasibility of establishing regional cybersecurity resource centers to help supervisors and providers address these challenges with cybersecurity, where they may not have the expertise, but to draw on common sharing of threat information and best practices to help people out. So staying with the topic of how the industry is doing, do you see differences in the security practices of mobile network operators as opposed to bank-led mobile money operations? And should small fintechs be focusing on providing these protections?
I think most of the fintechs do. Fintechs tend to be driven by tech, and they understand, though the majority of them at least are understanding the need for security, and they tend to at least be aware of the cryptography and cybersecurity issues. Banks aren't any more than mobile operators. They tend to buy it in. When you get cards issued with the Visa logo or the MasterCard logo, you're buying in technology from providers who have been essentially approved by the card schemes. So you don't really need to understand it. And there is a tendency to assume that everybody else is doing it, therefore it must be fine. So I have worked with a bank, who shall be nameless, who very proudly showed me their mobile banking app, which was SMS based and was using account numbers and PIN codes in plain text. So you'd send your message off and get your balance, for example, back in another SMS. Senior managers in banks are not technologists, and they need to be looking to cybersecurity experts. They need to allow these people to be heard. So I know the techs in banks get frustrated with this. Non-tech people need to accept that when the IT department is demanding money, it's not just because they want to expand their empire. There really are issues there.
So are supervisors doing enough in this space? What are some good examples of supervisory practices? And likewise, what are some of the shortcomings in how supervisors make sure that these transactions are done safely and securely?
I'd love to point at good examples, and this is partly why DFS providers and others are not being pressured to implement better security. It's because the DFS providers don't understand it either. There's a lot of magical thinking that goes on. It'll be fine. The technologists understand it. It'll be all right on the night. I was involved in the development of a very large, very successful DFS, and I designed some tools which are around KYC monitoring, AML monitoring, the ability to dive into transactions and follow the money, and suspicious transaction reporting. And when 10 years later, I happened to be talking to the supervisor, for whom I had designed these tools. I asked him what he thought about them, and he told me that not only had he never used them, he had never made a supervisory visit. And I'd like to say he's alone on that, but when I speak to regulators and supervisors now, one of my standard questions is, when was your last supervisory visit to X? And it comes as a shock to me to discover that there are very, very few supervisors who actually visit the DFS operators. They need the training in this. They desperately need to know the questions to ask. And part of the purpose of putting together this deck and the complementary, more detailed deck, which hopefully will be made available soon, is to arm regulators and supervisors so they know what type of questions they should be asking of the DFS providers. And hopefully that will help to drive things forward.
Thanks, and that's also one of our goals with Cybersecurity Centers is to provide assistance to the regulators. One question that comes up is, should the supervisors be establishing strict standards for cybersecurity, or take a more process-oriented approach where each operator evaluates their own risks and takes steps to remediate them and to maybe hire ethical hackers to see what vulnerabilities are? But are you more for a standards approach or sort of a process approach as the best way to prevent cyber attacks?
I'm more in favor of setting some standards, because I have seen so much bad practice that I think that unless there are standards and regulators understand how to set those standards and supervisors know how to monitor conformance with those standards, then I think we will continue to see bad practice. And I think that the ethical hacker approach is something that should be done. If I'm a DFS provider or DFS operator, I want to do that anyway for my own peace of mind, because you can never be absolutely certain.
And are you finding that competitors in the marketplace decide to sort of hold tight their threat information and their experiences as a competitive matter, or do they see it as in their mutual interest to share this information for the overall strength of the payment systems that are being offered?
Well, I'm pleased to be able to say that I think is changing. I know of a number of countries where the financial sector players have started to get together on a regular basis, say once a month, to share threat information on a strictly Chatham House basis. In other words, none of it can be reported as Bank X or mobile money operator Y has suffered this attack. It's all for simply the sharing of information amongst practitioners, cybersecurity practitioners.
And
the DFS providers are not great at participating in that. It tends to be that it is the banks who are trying to operate some form of mobile banking or API-led approach have started to share this cybersecurity threat information amongst themselves.
Where can providers go for help on security issues? It's a challenge, but are there vendors or marketers or government agencies out there who consultants who can help if they're without necessarily promoting any particular company, but what kinds of assistance are available to providers who want to do the right thing?
I presume I'm not allowed to mention myself here, David. But anyway,
I think you already have, so that's okay. You can ask.
I would actually suggest they got in touch with you, because I think you are a very good centralized resource for this information.
And likewise, do you sense that there's any working together among supervisory agencies, maybe across countries, to try to collectively improve their knowledge and skills on supervising on cyber issues?
Well, supervisors generally do. They do get together fairly often to discuss these matters, to discuss matters generally around supervision of the financial sector in their country. But you should always remember that they're not technologists. And, well, in general, the background of most regulators and supervisory authorities is that of an economist in training. So they don't necessarily know what they should be discussing in this regard. So I really think they need support. And I think they should be encouraged to talk about this stuff, but really they need to bring their knowledge of, again, the questions to be asked up to a certain level, really, before starting those discussions.
And then one last question, which is, sort of in your experience, how does cybersecurity monitoring relate to compliance with the Know Your Customer regulations for mobile money operations and financial institutions?
They are related in two ways. First of all, in simply a lot of the information that you need in order to ensure the cybersecurity of your service in terms of transaction monitoring and being able to tie people to transactions is all around the same kind of information that you need for KYC and AML and CFT, etc. So it's pure good practice in that regard. And also, by engaging in those analyses, that form of monitoring and registration, it leads to so much other good practice in the operation of your service. So I'd say that AML, CFT, KYC, etc., it's almost a gateway to broader good practice in the cybersecurity space.
Thanks. We're just about out of time. Paul, did you have any other final comments to make?
I don't think I do particularly. I'd like to thank everyone for listening, and I've thoroughly enjoyed this, and I hope people have got something out of it.
Great. Well, thank you, Paul Makin, for giving us your insights into how we can better protect the security of our payment systems, which really will go a long way towards promoting financial inclusion efforts. So thanks again. Paul's full deck will be available as well as a recording of this webinar. And thanks for everyone for joining us.